This is the Equity Management Academy latest Seeking Alpha report published on July 23rd, 2018 by Scott McDonald, research analyst, gold and precious metals, commodities, stocks, and ETFs. Could silver gain 15% by September 2018? Summary. Going back to 2016, June 26, 2017, we can clearly see that the gold market made a low of $1,231. The market rallied to make a high of $1,378 by September 4th, 2017. The silver market during the same time made a low of $1,563 on July the 10th, 2017, and by November 11th, 2017, made a high of $1,826. I strongly recommend that you initiate positions to the long side in gold and silver, managing the risk accordingly with stops. End of quote. Go long silver and gold. This is a special edition of the Variable Changing Price Momentum Indicator, the VCPMI, weekly report for the gold and silver markets. In an interview on July 21st, 2018 with Equity Management Academy founder and CEO Patrick MontesDeOca, he said, "I strongly recommend that you initiate positions to the long side in gold and silver, managing the risk accordingly with stops." Big gains in gold. Going back to June 26, 2017, we can clearly see that the gold market made a low of $1,231. From that level, the market rallied to make a high on September 14, 2017 of $1,378. That was a gain of $147 move per ounce in the price of gold, or close to a 12% gain in less than 3 months. In the futures contract, that equates to a $14,700 gain for each contract. Each contract trades 100 ounces. Big gains in silver. The silver market during the same time made a low of $1,563 on July 10, 2017, and by November 11, 2017 made a high of $1,826. That was a gain of $2.63 per ounce, or close to a 17% gain in 2 months. That translates into a $13,150 gain per silver futures contract. Each contract trades 5,000 ounces. I believe MontesDeOca said that if we incorporate the 360-degree cycles, which we are anticipating, we should be experiencing some sort of a bottom in the silver and gold. If you look at the automated weekly VCPMI that we use to analyze a full range of markets, including precious metals and grains, ETFs, and stocks, we are looking at a convergence during this time frame that appears to confirm a pivot point for the markets to potentially begin a significant reversion to the mean to much higher levels. Looking at the longer-term picture by expanding to the 9-year cycle, the rally that we saw in 2017 was the beginning of the present cycle. Since then, we've seen a correction into this rally that broke out, making a high on September 2017 from the low in January 2015-16. We have come down on a correction between 50 and 60% from that high. A rally coming. Looking at the shorter term picture for the past 12 months, we see a compelling picture. The markets, MontesDeOca said, appear to be undertaking a significant rally that could begin at any time from these levels. When you look at the current weekly gold data, with the market closing at 1231, we are beginning to see an indication that we have some kind of harmonic timing in the price of gold and in the price of silver. By looking at the cyclical pattern, MontesDeOca said, what we saw was a substantial gain in the price of gold and silver, and we can expect the same over the next few months. Gold closed Friday at 1231, and we're coming into this week on a bullish tone based on the fact that the gold closed above the VCPMI average of 1229.20. The sell one level above the mean was activated at 1248 to the sell two level of 1264. These levels, MontesDeOca said, should be used to lock in profits as we come into next week. These are the weekly signals that can be used at any time during the week if the price reaches these levels to reduce your positions at the sell one level. The market has the potential, based on where it closed last week and in relation to the average price of 1229, to reach a target of 1264 near term. The average price of 1229 can be used as a protective stop to then go neutral. On the second close below 1229, anytime during this week, it would activate a buy signal at the buy one level of 1213 and the buy two level of 1194. If these levels are activated and the market closes above these levels, if activated, a buy signal and validates the target back up to the mean of 1229. Supply and demand levels. MontesDeOca explained the VCPMI trades the supply and demand levels based on the extremes above or below the mean. The sell one level is a 1-to-1 ratio above the mean, while the sell two level is a 2-to-1 ratio above the mean. If the market reaches the sell one level, there is a 90% probability that the market would revert back down to the average price, while the sell two level has a 95% probability that the market would revert back down to the mean of 1229. Conversely, if the market reaches the B1, B2 levels, it is a 90% to 95% probability likely, respectively, that the market will revert back up to the mean. We use vortex mathematics to create a structure within these levels of probability to help self-directed traders to position themselves with much better timing and intelligence in executing their trading objectives. MontesDeOca said the VCPMI looks at the relative implied volatility within the structure for day traders using day trading data. It uses the same principle for weekly or swing traders using weekly data. For long-term or monthly traders, it uses monthly data and criteria to identify the supply and demand levels. Such a convergence, as pointed out above, between the daily, weekly, and monthly cycles, as well as the indications of various additional metrics, such as Fibonacci's and Gann analysis, all indicate that we are at a major pivot point and could see a major reversion in the price of gold and silver. Silver closed at 1555 on Friday, closing above the average price of 1554, is a bullish indication for the coming week. Silver has activated the sell one level of 1590 and the sell two level of 1626 as target zones for you to use your judgment based on your portfolio size to take some profits at these levels. The VCPMI also tells you that if silver closes below 1554, that on the second close below that level, the market would activate the buy one level of 1519 and the B2 level of 1484. If activated from either of these levels, once the market price validates by crossing those levels and reverses back above them, it confirms a buy signal to a long. It thereby automatically activates the average price of 1554 as the target price. A second close above, it activates the sell one of 1590 and the sell two level of 1626. The price action in gold and silver next week will continue to validate the momentum that we seem to be building when we combine the VCPMI daily, weekly, and monthly harmonically, concluded MontesDeOca. What we call harmonic alignment is when the price, which is analyzed individually, equals the same levels for the daily, weekly, and monthly trends. This is one of the strongest combinations of the trends or alignments that we can get, which indicates that something significant is going to occur from these levels. I agree with MontesDeOca that based on the price action coming down to 52-week lows in the metal markets and coming down into what is expected to be a 360-degree cycle low with harmonic timing on all three trends, I believe that the path of least resistance is to the upside. MontesDeOca concluded that I strongly recommend that you use these levels to initiate positions to the long side, managing the risk accordingly with stops. The information in the market's commentaries were obtained from sources believed to be reliable, but we do not guarantee its accuracy. Neither the information nor any opinion expressed herein constitute a solicitation of the purchase or sale of any futures or options contracts. It is for educational purposes only.